All right, guys. We are live. Yeah. Once again, I welcome you to today's tutorial. Yeah. The 10th in the series. In the ongoing 21 days tutorials event. Yeah. I welcome you guys again. So you're welcome. So without no delay, let's get to business for the day. Now, so on our last class, we had a session on Fib, looked at Fibonacci levels. Yeah, we had a guest speaker in the person of Jordan. Yeah, one of South Africa's finest trader and Bybit South Africa ambassador. So yeah, but I think yeah, of course, that session was little bit advanced. Yeah, especially for the newbies. So today we'll be looking at Fib again, the basics of Fibonacci. Now, so I will start by saying Fibonacci is a leading indicator. Yeah, it's one of the indicators that we use as confluence, as price action traders. As price action traders, we don't rely on indicators to make our decisions. We looked at price action to determine, to make our decisions, our trade decisions. But then there are few indicators that we can look into. More of leading indicators and less of lagging indicators that we can look into as price action traders to get confluence. As traders. Now, so some of these indicators include volumes indicator like candlestick volume, volume profiles, fixed range, visible range volume profiles, and that CVD, including going away from volume indicators now. We look at indicators like the Fibonacci extension and Fibonacci retracement. So the Fib is a leading indicator. We have leading indicators and lagging indicators. So Fib is one of the indicators that as price action traders we can utilize to use for confluence for trading. So that's why we'll be looking at Fib today, because we'll look at Fib, how to plot it on the chart, and how we can also utilize it. So we considered some levels in the Fib retracement as key levels. Now, remember we had a class 2 sessions ago where we discussed on key levels, on how to play the swing failure pattern, SFP on this level and all that. So we have certain areas in these Fibonacci levels that we can refer to as key levels. You get me? Now, so Fibonacci levels, as it sounds, these are levels. Now, I will say Fibonacci levels are horizontal lines, horizontal levels on our chart, where price tends to find support or resistance, respectively. You get it? Fibonacci levels are horizontal lines on our chart, where price tends or is expected to find support or resistance, respectively. You get it? And now, in the Fib levels, there are key areas we look into. We look at the 0.38 level, the 0.61, and some other levels, including the equilibrium. So we look at that shortly when I begin to plot my chart. But then, how do you plot your Fib? Now, Fib levels, when we look at the Fib retracement too, when there is an impulsive move, or either bullish or bearish impulsive move, now we use the Fib level as retracement to get the levels where price will retrace back to and find support or resistance, respectively, for a bullish move or a bearish move. Yeah. So I think this chart is clean enough. So we can go. I repeat, Fibonacci levels are simply horizontal lines on our chart where price tends to find support or resistance, respectively. Now, when there is an impulsive move, either bullish or bearish, now price tends to retrace, right? So we use the Fibonacci retracement to get levels where price will retrace to and find support or resistance, respectively, for either a bullish or a bearish scenario. So that's what we use the Fib retracement tool for. Now, how do you plot the Fib on your chart? You take the key highs. You look at the swing high and swing low. Now, this makes sense. This makes sense. You see, it still boils down to market structure, understanding the market structure. You want to take the most recent high and low for your chart. Now, if it is a bearish move, if the market is bearish, you plot your Fib from the top to the bottom, to the very low. If it is if the structure, market structure, is bullish, you start plotting your Fib from the bottom, from the low to the high. You get it? You take it from the low to the high. If it is bearish, you take it from the high to the low. So you see, it still boils down to knowing the market structure. So when you know the market structure, you are able to find to get the key levels to plot your tool. Now, this must be done rightly, because you don't want to just plot the Fibonacci tools on your chart wrongly. You get me? So you want to plot it on your chart rightly in the right manner. So you look for the most recent high and the most recent low. Now you can play the Fibonacci levels on all time frame. So we are going to look at the 1 hour time frame and also look at the daily time frame for some examples. Now, for higher time frame, we're plotting the Fib levels. You take deep swing highs, your deep swing high and deep swing low. The deep swing, that's what we use for on higher time frame. While on lower time frame, just take the most recent and significant high and low. Now let's practicalize this now. So this is it. This is my Fibonacci retracement. You can see Fib retracement. So I'm going to pick this tool now, then come here. Now, a rule of thumb. Now, this is it. Let's say we're in a bearish market structure like this. Now, let's say we add this move down here from here that came out to this level. This is what you do. You take from this particular high. This is where you start plotting your Fib from. You take it from this level, then you draw to the right. You draw to the right to the very low and stop there. Okay. All right. For newbies, you can make these lines visible and clear. So I'm going to just let me make these lines visible now. I actually lock them low, so I'm going to make it visible. So, and as well, when you go to settings, I think if you are using the Fib retracement tool, that automatically on your chart, that's with the settings from trading view or whatever chart you are using it on, you will see this trend line. So for newbies, it is important you can make use of this so that you know where you draw the high and low of the Fib. So I personally don't use this, but I'm going to turn this on now for the sake of this tutorial so that newbies can understand what I'm saying. You see this trend line, so I'm going to turn it on now. So I'm going to save this. Then yeah, come let me make this line a little bit bold. Okay, so I believe these is clear. Now let me repeat this again. What you do, you take the eye. From the eye, the first thing to do first is to identify the market structure. Is it bearish or bullish? If it is bearish, you take it from the eye. The recent significant eye, yeah, the recent swing eye on that particular time frame. You take it, then you draw to the right. You draw to the right and take it to the low, the lowest point in price, and boom, you get it. This is it. This is your Fib level. So if price is going to retrace upward, now these are levels you look into. Now let's take a look at this. Now in Fibonacci retracement, the Fibonacci retracement levels, we looked at three to four levels, 3 to 4 key levels. Now take a look at the 0.38, the 0.618, and yeah, you can see here, right here, we have the 0.786. Now let me explain this a little bit. Now one of the significant levels on the chart is this. You see this level, the 0.382. Now you can also put this in percentage, but I like to use these numbers. You get it? So you can also put it in percentage. You get it 38%, and as the case may be there. So you can use these figures, these fractions like that. So the levels we look into, significant levels on the chart on the Fib, to watch where price tends to find support or resistance for in either bullish or bearish structure, is the 0.382, the 0.618, and now this, you've heard of the word golden pocket. The golden pocket. Now the Fib golden pocket is some levels on the Fib chart are referred to as the Fib golden pocket, because these are key levels where price finds support and resistance the most, that plays out the most. Now once these levels are not respected, then price will continue upward or downward to that direction. Now we are looking at the bearish market structure now. So if this level is not respected, then price will continue upward. Now, so that's it. Now the 0.618 is referred to as the Fib golden pocket. Not just that, we also have the 0.786, the 0.786 that can also be taken as the Fib golden pocket. We also have the 0.66 that can also be taken as the Fib golden pocket. Now in the outer world here, in the trading space, technical analysis space, you see some persons saying they tell you the 0.6 is the golden pocket, this is the 6% and all of that. But to me, the 0.618 to up to this point is the golden pocket. You get it? The 0.618 up to this point, 0.786. I refer to this level as, I take this level as the Fib golden pocket. Now, if I'm going to play the level horizontally, this is the key level, the 0.618. So if I'm going to ladder my entry using this level as confluence, this is the level I'm going to ladder in. You get it? So we refer out. So let's say from the 0.618 up to this level is referred to as the golden pocket, the Fib Golden Pocket. So you can see the color. Yeah, and also you don't have to do this just exactly the way I do mine. You can also bring out, go to settings and bring out these other levels in between. The 0.66, the 0.702. Yeah, the 0.702 is also a level that is being regarded as the Fib Golden Pocket, especially when playing the range, when playing the lower time frame range. When you're trading the range on the lower time frame, that level plays out. So, but I don't turn those levels on my chart. I just turn this the start and the end. So I take this as the Fib Golden Pocket. Now we say there are levels. Three levels we look into: the 0.382, 0.382, 0.618, up to the 0.786 are the levels on the chart where we expect price to react from during retracement. Now, also, we don't ignore the equilibrium, the 50%. The 50% on the Fib retracement is also a key level that plays perfectly well, especially when playing the range as well. So we look at these scenarios in further explanation. Now let's take a look at an example here. Now we can clearly see on this chart where you look at my Fib now, took from this top to the bottom. Yeah, you can say this is the golden pocket, the 0.618. Yeah, 0.618. The one of the most relevant Fib Golden Pocket levels on the chart. You can see, look at the current BTC chart. Now, before now, I posted a chart. Posted this my chart, telling my expectations where I expect price to tap into this level. Now you can see right here that price rejected from this golden pocket. Do you get it now? You see how it works perfectly. The first rejection was from this point. We got the first rejection here. It rejected and comes down to this level. Then price went up again the second time. Also rejected from this level, the Fib level, and comes downward. You can see how this level plays out. Before then, you can see first of all, we got a reaction at the 50%. This is the 50% level first, before price continue upward to react from the 6%. Now, when using the level, when the 0.382 of the Fib level fades to hold, the next place we look up to is the Fib most relevant golden pocket level, which is the 0.618. Now, price can wick above this level, but providing we get that this level is respected. If this level, this 0.618, which is the most relevant Fib Golden Pocket level, is not respected, then there's a possibility that we are going to just reverse price is going to just reverse up. Continue upward. You get it? So when the 0.382 fades to hold, the next place to watch is the Fib equilibrium and these are other level. But this equilibrium, when we are looking at range play, I will show you how to perfectly use this on playing the range. So when this fades to hold, just look up towards this Fib Golden Pocket, and as well the Fib equilibrium, which is 0.5. You get it? So this is how it plays out. Now note, the Fib retracement tool must not be used isolatedly. Like I said earlier, it is one of the tools we use in Confluence to trade. So I believe you all understand that explanation I did at the very beginning of this tutorial. So you must not, it should not be used isolatedly alone. Don't trade based on the Fib level alone. We use it in line with confluence. Now, if you look at my chart, now you get the whole thing. As you know, I'm a trader who doesn't chase price. I map my level and wait for price to come to me, give me my entry. Now, first of all, we had a daily level here. Which which price breaks down. Now, this was acting as support, then price breaks down. A rule of thumb, we know once a support level is taken out, once the support level is broken, we expect that level to be a potential resistance. So first of all, we had the daily level here. Second, this was a supply zone. That's why you see these are horizontal, these are colored spikes here. It was a supply zone. Then thirdly, the third confluence, this was a golden pocket. Now you get why this trade played out well. You see how we make use of it. We don't just make use of the Fib 2 alone. We make use of it, use it as confluence to our trading. Make use of it as confluence. First of all, we had the daily level here. We had a daily level on this chart. Second, we had a supply zone on a particular time frame here. Then we add these Fib levels. This is how you play it. This is just it. It's simple. You want to make use of it. Now, how do you trade it? Is when the Fib level is in confluence with other TA strategies. Yeah. When the Fib level is in confluence with other technical strategies, you play it well. You can play the SFP on the Fib level perfectly. You get it? You can play the swing failure pattern on this level. Now, when I talk about key levels, this particular level, the Fib Golden Pocket, the most relevant level in the Fib Golden Pocket, which is 0.618, is a key level. It is a key level. Now, this 0.382 is not referred, cannot be taken as a key level. It is a level where we expect price to hold, but yet we can't take this as a key level. So we actually don't play swing failure on this this level. So, but if it gives, we take it. But then this particular level is a key level. Now, talk about key levels. We said key levels are on key horizontal levels on our chart, like horizontal, the daily level, weekly level. Yeah, talk about Fib level. Now, Fib levels are also key levels. This is the particular key Fib level referred to as key level. Then talk about the POC, NPOC, value area I value. So those are key levels. So you must know that this particular level of the Fib retracement tool is considered as a key level. But we don't trade it, don't just trade on it alone. We use it as confluence. Now, you can see how perfectly this plays out in the current BTC chart. This is the 1 hour time frame. So all of you in the community, I posted this chart days ago before this whole thing played out. So you can see how it works. Just get it. If it's in line with your level, then play it safely. Don't trade on it alone. I'm making emphasis on this. You don't trade based on the Fib levels alone. It must be in confluence with other TA strategies. This particular short setup I took here, you saw the confluence. One, it was a daily level that was flipped to resistance, a supply zone. Then we add this level in line with the at the middle of the supply zone, which is the equilibrium. Normally, you know when we want to take entry in a supply zone, we use the equilibrium, right? In the supply zone or a demand zone. Now we have a daily level at the equilibrium. Then we also have a Fib Golden Pocket at the equilibrium. So you see the confluence. You just execute, no stress. So that was how this trade setup came about. So it's as simple as this. I hope you all you guys are following. So this is it. For a bullish scenario, yeah, let's look at, let me take this off now. Let's let me get something for a bullish scenario for each time. Let's see. Let's look at something here. See if I get a perfect example of this chart. Now let's look at a bullish scenario. Now I told you the first thing you have to do is identify the trend. Is it a bullish market structure or a bearish market structure? If it's a bearish market structure, you start plotting your Fib retracement from the top, from the most significant high, the most recent swing high. The most recent swing high down to the low. If it's a bullish market structure, you want to start plotting your Fib retracement to from the most significant swing low, which is the most recent swing low to the top. Now, you see this move we had here. We had this move here. It was a bullish move, and yeah, you see. So all I have to do right now is plot this from this level and take it to the top. You know, we said we extend to the right. Now let's watch this price action here. Yes, let's see what happened. Now let's see price. It's price action. This thing is always plays out. We will know. We'll see. Okay. Let's bring this down. I think this would be the level, because we are actually looking at a past price action. So as the time this level was there, this was the high. So this was later created after this retracement. So I won't let's not miss it. Now this was it. We got to this point. Now make use of this example. Now you see when this happened and price pumped to this particular point here. Hope you get it. This is the point I'm talking about. This is the point I'm referring to. This is the point. Let me pinpoint it. Yeah. You get it. This is the point I'm referring to. Price pumped from this level to this level. Now, want to get a retracement. What do? We plot our Fib from this level to this point, this high. Then this gives us our level. This gives us our level. Now you can see after price got to this point, you see when we retrace down, you can see again the Fib Golden Pocket, the 0.618 level was respected. You see, price wicked down this level, even tapped into a daily level we had here. These are daily horizontal level. Yeah, you see, price rejected from the Golden Pocket again and went up. You see, this is how the Fib level plays out. It's just simple, just a simple thing. Just to get it right, we'll get it right. The swing point, the most recent high and low for either bullish or bearish market structure. So you just take it from this point, take it to the top. Then these are the levels. The levels we look for price to find support. The 0.382 level, equilibrium, and the Golden Pocket, which is the 0.618. Also down to the 0.786. There are other Fibonacci levels that can be referred to as the Golden Pocket in between this level. Like I told you earlier, I don't bring them out on the chart, but I just know from this zone to this zone, you see the color. This zone, I know these are the levels. We have the 0.702 that most traders takes that as their key level for Fib Golden Pocket. We also have the 0.66. You get it? 0.66. So it all falls in the middle of this zone. So you get it. We see price rejected from this level again. So this is how it works. It's just simple. It's not difficult. It's not difficult. Now, when we need to look at the concept of demand and supply zone concept in details. You also see how you can use these Fib levels to get premium and discount level. You get it now. But this is just it. It's just simple. This is how it is. Just take the most recent point. The most recent, if it's a, first of all, identify the market structure. If it's a bullish market structure, you drop from the bottom to the top, drag to the right to the top. If it's a bearish market structure, drop from the top to the bottom. Don't miss it. Don't drop from the bottom to the top. So you get it. You get it. So this plays out in this level. We can begin to backtest. We can go back to the chart. We can even go to other charts and just backtest it. You can see it just plays out most of the time. So once first, and this is one thing you must know. Once the Fib is rejected, the Fib level holds for the first time, you must be careful when using it again. If it is not if there's no strong confluence in that particular zone. You get it? You see it plays out here, then at then price later comes down and breaks this level. But this is just how it works. This is how it works. This is how to get the Fib level. Now you can get it on your trading view, mobile, Pixie, even on your exchange, on the Bybit exchange chart, on the Bybit chart. You can also get it, the retracement too. We have the Fib retracement, we have the Fib extension. We're going to focus on the Fib retracement. That's what we are doing now. And as a newbie issue, we can focus on that for now. Yeah. Although we have other tutorial, we'll look at the Fib extension. Although the last tutorial we had, which I said was a little bit advanced, we also looked at that. Jordan talked about Fib extension as well. So it's just it. Just follow the rules. It's as simple as that. That's how to get the Fib levels. That's how to get the Fib levels. The most recent, the most significant swing point. You start plotting from the most significant swing point. The most significant, that's the most recent swing point. That's what I mean. The most recent swing point. Because there are a lot of swing points before that move. You get it? But the most recent swing point, like we just looked at the bullish and bearish example a while ago now. Yeah, you see, the most significant, the most recent swing point, that's what you take into account. When I say significant, I mean the most recent. That's what I'm talking about, the most recent swing point. Because for the level to become a swing point, it means that high or low is significant. So the most recent swing high or low is what you start plotting your chart from. Don't miss it. It all boils down to market structure. When you understand the market structure, you know when to add to validate a swing high or a swing low. So just get it and start plot from that place. If it's bullish market structure, like I said, let me repeat again. If it's a bullish market structure, you plot from the bottom, from the swing low to the new high, the new top of the price. If it's a bearish market structure, you start plotting from the swing high down to the new low that was produced. You get it? Like we saw here. Let me repeat this again. We took these points here from this swing high. This was the most recent swing high at the time this low was produced. You get it? Then we took it down to this low, down to this low. And we expected it to play out when we had the Fib Golden Pocket here, which is the key level. Like I said, this is the level we refer to as Fib key level when we're talking about key levels. So use it in confluence with this. This was how I got with this trade I posted days ago. This is how it came about. Daily level, supply zone, Fib Golden Pocket, 3 confluence. Just execute, no emotions. Just execute the trade and let it go. And you see how it plays out. So sweet and nice. With 10x leverage. That was a nice risk to reward ratio. So that is it, guys. That's it. And now we can also use the Fib level to determine targets. We use it in the opposite direction. in the opposite direction. Now, this is how. Let's look at that quickly before I go into the chart. Look to the chart, and yeah, as always, I'll make the session interactive for 15 minutes. I'll take your questions and that. But then let me quickly show you something. How to use. Remember, you can get the Fib level on all time frame, daily down even from the weekly level downward, even on the 1 minute chart, 5 minutes chart, and all of that. So yeah, we are doing this now on the 1 hour chart because we want to go to a higher time frame, so we don't get because if you can play it on, if you can understand it, do I place it on this lower time frame, then it means you can actually plot this on a higher time frame. You get it? Just know the rules. It's simple. The most recent swing point, take it to the new level that was produced. Now, quickly, let's do this. I said you can also use the Fib retracement to look at target, to get your target. This is how we make use of it. Now, let's look at this particular trade. We took. I know a lot of you took this trade in the community, including I myself. Yeah, when I posted it days ago. So let's look at this trade since we all enjoyed this trade. Now, this was the level. From this point, took it down to this low. You get it? We had a confluence here. Like I said, we don't trade the Fib isolatedly. We must do our TA properly. We have a key level, the daily level, supply zone, then the Fib Golden Pocket here. That's confluence. All we have to do is place this is our entry. Now, let's say this is our entry. Let me pull chart setup here. Let me show you how to make use of the reversal. Now, this is our entry. Then stop loss just right above the golden pocket level. That's 1.4% stop loss. Yeah, simple as said. Now, how do you use the Fib for target? This is what you do. Now, this is your entry level, right? All you have to do is this. You take the Fib and take it in the opposite direction. Now, opposite direction in the sense that this. Remember, it is a bearish market structure. So you started drawing your Fib from the top downward, right? But now you want to use it in the opposite direction. You would not take it from the low and take it upward. Now, when taking it upward, your entry point will not be the low, will not be the high where you stop. You get me? Your entry point will not be the high. Just follow me. Let me show you something. Okay. Let's do this. I don't want the chart to be crowded. Now, so I'm going to take this off. Now, we already know our entry, right? We already know our entry using this Fib. So let me take this other Fib off so that you get a clear view of what I'm saying. Now, this is our entry, which is the Fib Golden Pocket of the main direction Fib. Now, I want to define our target. We're going to take it to the opposite direction, which is you take it from the low and take it upward. Now, you don't take it back to that high where you started taking it from because it's a bearish market structure. No, your new high will not be your entry point. The initial Fib Golden Pocket where we take our entry, that will be our high. Then you get it here. Now you can see we cannot tag this, cannot be our target. The Fib Golden Pocket again cannot be our target. Now you saw how this plays out. This was just it. We can use this to define our target. You get it? You see how when after this price tapped our entry, you see the way price came down here, respected this Fib Golden Pocket and reversed again. This is how you just use the Fib. You can see the Fib retracement we can say is a wonderful indicator after all. Yeah, like I said, this is one of the few indicators that as price action traders we make use of. You can see. Just take it. The opposite is it. Just the opposite. First of all, you identify the market structure. It's bearish. You take it from the top. If it's bearish, you take from the top downward. Now you get your entry level. This is our entry level. Why is this our entry? I'll repeat again for emphasis sake. Just to make emphasis. We have a daily level here, a daily level which is expected to act as resistance. This is a supply zone. This level was right at the equilibrium of the supply zone. Then we have a Fib Golden Pocket, which is 0.61 with the most relevant level in this Fib Golden Pocket region. Same equilibrium of the supply zone. This gives us theory confluence to take this chart. Now we place our entry here. What do we now then do? We want to define our target because we want to get a proper target. Because most people take trade and at the end lose it, or because probably they didn't place a proper target, a realistic target. You want to use the Fib to make a realistic target. So this is how we place the target. We simply take it from the bottom, the opposite direction. Take it, but then our entry point will not be the stop, not the high above. Our entry point where we take the trade, our entry point for that short position will not be the stop. Then look at the Fib golden levels again. The Fib golden level will be our take profit target. You see how this trade, that was how this just played out. It was a nice realistic trade. So if you are taking this trade, you stopped you went out here. Let me put it properly. You get it? You target this level. You can see this was just the short setup. You TP here, take your profit here and leave. Now you see after this price came to this level, after you must have taken your profit, just showing you the way I play the game. It's just easy. It's easy, simple. You don't have to beat yourself too much, and no. This is just it. You take your TP, then you see price return to this level again. After taking your first TP, then you want to take a short setup for me again. On that short. Why? Because there's much confluence. A daily level, Fib Golden Pocket, also a supply zone. So we expect it to act up again with just the same way we took it before. Now let me replace this again. All you have to do, we take the short setup. This would place our entry here. Remember, our stop was a little bit above the Golden Pocket region, which was around here. Now this is the stop. What do we do again? We target the Fib level again. Now you can see price has come to your TP again. You can this how you just play it. Intraday trading, this how you just play it and just TP, and as a trader we are on our chart, right? This is our business, so we stay on the chart. So that's why sometimes that's why we show you these things so that you can follow it, because sometimes we might not be able to be quick to show you this was happening on the chart. So when you know these things, you know what to expect. You get it? It comes up again, this happens, then we TP here again. You go out. These realistic targets. You don't just want to target 16K. You just keep waiting for 16K. You get it? So you just want to place a realistic target. So you can use what I'm saying in essence is this. You can use the Fib level in the opposite direction to get to place your target. It's simple. We call it the two-way Fib play. You first of all get the main Fib to get your entry confluence with other zones, then use the opposite direction of the Fib to determine where your target will probably be on that particular time frame you are playing it on. So people, this is what we are doing, traders. This is just it's simple, isn't it? Right? It's just simple. It's just know the rules and follow it up. So let me look into the chat now, and I'll begin to take your questions now. let me look into the chart. Let me look into the chart. But then before I do that, let's make this an interactive session for the next 15 minutes. Yeah, just question.